The main reason our clients are coming to us saying, I want to start investing in retail, in industrial, in other commercial assets is because of landlord and tenant legislation.
Yeah.
Right. And I know a lot of people know of this, but I want to dive into it briefly here, which is commercial and industrial properties do not have landlord and tenant board.
Yeah. Yeah. If you have a commercial lease, it's just the terms of the lease.
Contract law.
Yeah, it's contract law.
So with this, a lot of our people that have dealt with multifamily now for many years who have a little bit of cash saved up are saying, I'm tired of dealing with landlord and tenant board. I want to go into commercial real estate so I don't have to deal with it.
Welcome back to REI Hot Seat. Andrew Hines here with Jacob Campagnaro in our new studio after quite some time away. I'm back and we're back.
We're here.
Yeah.
You probably can't tell it's new studio, but it is a new studio.
So. To an undiscerning eye, this looks exactly the same. Yeah. And that was sort of the intent. We liked the
We had this material sourced from the old studio so that we could we liked it. We liked the design, so
it worked out. Yeah.
It did work out, and we're going to slowly get this new studio refined.
Yeah.
And it's just going to be able to produce a much better podcast, much better video. So we're working on that. As you'll see, every episode is going to get slightly better, more lighting and this and that, and we got a lot of cool ideas.
Yeah, lots of fun. Ultimately, we want to bring you guys better content, more content, and we want to hit on the points that you want. So I've mentioned this before, but please make sure that you take a moment, leave us comments. I do read them. Sometimes it's not exactly on the day you leave the comment, but I do read them, appreciate it. I've had some recent feedback that people really wanted us to get into the nitty gritty even more on some of the numbers. Yep. So, hey, I can appreciate that. That's sort of where I live and breathe. So we'll be doing more of that. Today we're talking about a deal that Jake just has in his queue here. I know nothing about it. So why don't we just dive into that, Jake? Yeah,
so I want to start actually by talking about a asset class of commercial real estate for investors, which we're then going to bring down to a listing. We're going to talk. So I brought this listing here. So we might not get into the nitty gritty, but I am actually happy to do an episode 2 of this and dive into the nitty gritty because I've done a full analysis on this. But I wanted to introduce our viewers to different asset classes in the commercial real estate world, because we talk a lot about multifamily here.
So we're going industrial today.
We're going to go small bay industrial, and I'll explain what that is and why we're there. But we've listened to our viewers. We're listening to the market. Obviously, multifamily is still one of the most popular asset classes. We are still doing a ton of that, but we have lately been having quite a few people saying, hey, I'm concerned about rental markets. I'm concerned about these apartment buildings that they were looking at cap rates are going up. And this is more seller sentiment rather than buyer. Buyers are still very excited about the market. There's still great opportunity to buy. Yeah. We're finding 6.5 caps in Hamilton, Ontario, right? Crazy numbers.
Yeah, and it was a matter of time before the cap rates came up a bit, given the higher interest rate environment.
Right.
And, but with that said, yields are expected to continue to go down as, Canada admits recession and, things like that happen. There's a good chance that we do see yields go down, but anyone trying to predict it, it's tough.
But I think with all of that, you're still going to see cap rates stay elevated. High. They're going to stay elevated, right? Because uncertainty and recession does not mean cap rates are going to compress. Inflation means cap rates are going to compress. Right, because it's the uncertainty that's
that's true. Inflation in the short run doesn't, because inflation in the short run creates uncertainty, but over the long run, inflation ultimately appreciates assets against the income they can earn, which is why cap rates compress.
Yes. So we'll see where that all goes. But we've had a lot of our own clients that have bought and sold multifam with us have now come out and say, hey, I'm really interested to talk about other asset classes in commercial real estate. How else can I invest in commercial real estate? And so we've been doing a lot of these intake calls or these re-intake calls where we start talking about retail plaza, small bay industrial, large bay industrial, whatever you want to call it, and look at cap rates and investment strategies for these different types of property. So for today, I just grabbed one off of MLS. I have a very high level data on it today to present, but we can go into the nitty gritty. I've done a full analysis on this. So today we're looking at a property. It's in Burlington, Ontario, our hometown. It's considered, I like to call it small bay industrial. And what I mean by that is it's an industrial property that's broken up into multiple units. Some people call it flex use. And so this is your typical auto body shop. This is your typical plumbing place, right? So usually
so
there's
they
a
have a
little
little
component.
storefront on the front?
There'll be a little component of office
Yeah.
or retail, and then the majority of the space is going to be
It's like workshop
with a
Yeah.
roll-up door at the back, right?
Yeah, I used to work at a place like that when I was 18. I worked in an electric motor shop, exactly like that. Little office at the front. You walk through, big shop at the back with the
And these
forklift and all that.
These are extremely popular units for tenants, right?
For contractors would probably really like it.
This is a very easy unit to get into.
Yeah.
You're going to find tenants from all walks of life. You're going to find tenants from different businesses. The fact that it's flex use, and usually the zoning is an employment zoning or a business zoning rather than a heavy industrial zoning, really helps, because now we can do anything from manufacturing, auto body, mechanics, tire shops, but we can also have retail, shipping and warehousing.
Yeah, so the flexibilities in the use.
We were working with a lady a few years ago that was sold hair bands. And she was looking to buy
Out of one of
flex
these?
use. Yeah, she was looking to buy
So she was
flex use.
manufacturing them there?
She was manufacturing, and she got so big that she was like, I need legit warehouse space that I can ship and receive from. So we were looking to buy some of this. So it's really, really broad scope of tenancy. So your vacancies tends to be slightly lower than, let's say, like office or large industrial warehousing or large industrial, like manufacturing industrial.
Yeah.
People bring up the concern of, the economy, what are we doing? Tariffs, is this still a thing? From what I've seen, yes, like obviously tariffs affect everybody, but when you're looking at a 2,000 square foot, 3,000 square foot small bay industrial, like those kind of economics aren't going to directly affect the business that much, at least from what I've seen. Correct me if I'm wrong. Maybe that's an offside statement.
It's really, I don't have a specific thought on that. I mean, I feel like if you have any sort of real estate, it's so micro location dependent, right? Like if you're right near a major highway, you're going to be so much less affected than people who are in more rural areas with a property like this.
Which is what I was just going to jump into, right? And and that's those. So that's the pros of small bay industrial or flex use industrial. Also, pros are going to be the landlord and tenant stuff, which I'll dive into. But the second part of it is location. So one of the cons of this type of real estate is going to be it is more location based, right? As you just said, an apartment building
works anywhere.
It pretty much works anywhere.
Because everybody needs a place to live.
Obviously, there's metrics where you're like, okay, you don't want to be in a town with declining population. You don't want to be in a town like.
But that doesn't exist in Ontario, really.
Right.
I mean, I'm sure there are some examples of it, but it's probably pretty.
We'd
rare.
have to look pretty hard to find.
That's the big difference. In the U.S., you find that. In one of the things I love about Canadian real estate investing, because there are definitely some positives, is like a place like Ontario. It's like, where do you find a city that has a declining population?
Yeah.
Pretty much doesn't exist. With that said, though, like. A facility like this we talked about Port Dover a few weeks back. Let's talk about that. If you had a facility like this, and you guys can see it on the screen, it would probably even do well in Port Dover, Ontario, because you're going to have electricians in Port Dover that want to shop. You're going to have plumbers and people who are servicing the population that goes there that would want that. In a city like Burlington, you're going to have people who are servicing cities nearby because it's so densely populated here.
Again,
you just have a bigger base.
It's like city services, it's neighborhood services that are going to go in here, right? Like you may get an international tenant mix, right? Depending on how big the unit is and whatnot. But most of the time it's going to be local tenants, right?
Servicing the local population, a lot of that. There might be some small manufacturing.
Yeah,
as well.
Small manufacturing. So
some drug businesses. I'm just kidding. Local drug mule. I'm just kidding.
You need a place to store it. But yeah, so location's a little bit more dependent. Like you don't want to be out in the middle of nowhere. You're going to have harder time leasing. You're going to have your rents are going to be more affected, right? If this is right by Pearson Airport, right off the highway, and you have a nice little small bay industrial, you're going to have high rents. You're going to have good tenancy there because of the use.
Yeah.
But pretty much any town, any city with this, as long as it's in a reasonably populated area without declining population, you're going to be fine with it.
Well, you got to ask the simple questions. Is there going to be a demand for this unit going forward? Well, who's my tenant? Is there going to be a demand for their services?
Correct.
That's how you determine, overly simplified, but there's one way to determine if that's an investment that makes sense to look into further.
Yeah. And then the other thing is like another con I could say is just obviously when you're looking at this type of real estate, it's the vacancy can tend to be higher. right?
Yeah. Well,
and honestly, speaking in right now with the time and the climate we're in, I'm doing significantly more commercial and industrial leasing than I am residential leasing right now.
yeah.
We're having a harder time leasing residential than we are commercial, which is
a
not
lot
the
of these
norm.
businesses can look a little beyond the current situation, right?
Well, yeah, and like again, like even if you're looking at, okay, before COVID, we had, a 30,000 square foot space. Now we only need a 3,000 square foot space. There's a ton of that out there right now, right? There's a lot of people that are now doing just remote business.
Yeah.
Right. So anyways, I don't want to dive too much into this because I want to cover this, but I want to talk.
The specific deal.
Yeah, this specific deal.
Yeah,
and
let's
I want
talk
to
about it.
and I want to talk one more pro about this, and we're kind of jumping all over the place, but this is a very important one. The main reason our clients are coming to us saying, I want to start investing in retail, in industrial, in other commercial assets is because of landlord and tenant legislation.
Yeah.
Right. And I know a lot of people know of this, but I want to dive into it briefly here, which is commercial and industrial properties do not have landlord and tenant board.
Yeah. Yeah. If you have a commercial lease, it's just the terms of the lease.
Contract law.
Yeah, it's contract law.
So with this, a lot of our people that have dealt with multifamily now for many years, who have a little bit of cash saved up, are saying, I'm tired of dealing with landlord and tenant board. I want to go into commercial real estate so I don't have to deal with it. Yeah. Whatever is written in your contract is precedent. That's law. That's what the tenancy is. Yeah. So if you're saying you don't pay rent, I can come and lock your door in 5 days, and that's in the contract, you can do that. Yeah. Now, there's industry standards for this type of stuff, but it's whatever's in that contract. So it's very refreshing dealing with this type of tenancy. We find the tenants are, for the most part, better, right? They're risking losing their business. They're risking losing having their doors locked if they don't pay their rent. They're going to pay their rent.
Exactly.
Right? And there's ways we can protect the landlord, and there's ways we can protect the tenant for these types of things. But I really like that. Mm-hmm. So just wanted to jump on that. Let's jump into this particular deal.
Yep.
So this is in Burlington, Ontario.
Not far from the train tracks, I can see.
Not far from the train tracks. It's decent highway access. Not the best highway access.
Aldershot almost.
Yeah,
right?
it's Aldershot. Yeah. This is down the street from a building that another client of mine owns, so I know the area very well. It's a bit of an odd part of town, but it's an interesting property because we have small bay industrial. It's around 11,000 square foot, as you can see. This is listed by Blair Blanchard Stapleton. It's not my listing, but I have interest in this type of real estate asset, so I wanted to do an analysis on it. So this is a cool little shop. So there's, to my understanding, there is 6 units, all with roll-up doors.
Yep.
So you can see that here. Because of location, this is not high traffic, so this is going to tailor more towards destination use. Right? Meaning you're not getting foot traffic here. You're not going to be opening up an ice cream shop. Right?
You could be a destination for somebody who needs a specific part. Like you fabricate certain metal parts, and somebody needs that, they'll come to you. That's one of those type of things.
Correct. And so the way this is set up right now is there's one tenant that is taking multiple units. And they're a plumbing company, so they're quite large.
Makes sense.
They have their vehicles. They store their vehicles there. They run the shop. They have their supplies, whatever. That's their headquarters.
Yeah.
Then there's actually an owner-occupied unit, which can be vacant on closing, and then there's a vacant unit as well.
Gotcha. So
as
that count, so 3, 1, and 1, right? So that's 5. Then we have a 6th.
So there might be 2 vacancies, then one owner-occupied, and then those guys take the other units.
Gotcha. Okay.
I have a rent roll. I'll bring it up. So what's cool about this one is owner-occupied unit. They're throwing a rent in there right now. That's what the owner's paying. But if he's willing to leave, then we can bring that to market. Mm-hmm. The vacant units we can bring to market. And then the plumbing shop, I don't have a copy of their lease yet. But what I would do is read their lease. What's happening in their lease? Mm-hmm. How long are they there for? Right? If their lease is expiring, that might not necessarily be a bad thing, because then we can look at bringing their rent up to market as well. So that's the other thing. There's no rent control on commercial.
Yeah, most commercial leases have a built-in price escalation in them anyway.
Correct.
Right?
So you do 50 cents a year, $1 a year, whatever it may be.
Per square foot.
Yeah. But if they don't have the renewal, And there's basically up for
just new contract.
It's a new contract. We can reset the terms, do what we want to do. So this is kind of a cool one because it's a bit of a repositioning play is the way I would look at it. You're coming in, you know, I don't know where we're going to get this on price point. They're asking, I think it was
3.2 I saw.
3.2. Might have some flexibility there. But then we can come in and reposition this property, drive new rents, put some new tenants in there, and we can bring the rents up to market. And so in this area, market would be considered about $17 a square foot.
$17, okay.
Okay, that's market. On top of that, with this type of asset, you collect something called TMI or CAM. Sometimes it's called CAM, sometimes it's called TMI. It's more or less the same thing. But so TMI stands for too much information. No. No, TMI is
taxes,
maintenance, and insurance, right?
Yeah.
So what we mean by that is the tenant is going to pay a proportionate share of the property tax.
Yeah.
The maintenance cost, so the cost of running the property,
So including
and the
like
building
plowing
insurance. So plowing,
upkeep,
grass. If there's a new roof, you charge that back to the tenant.
Oh yeah, I was going to ask
New
that.
HVAC. Well, again, you got to see what's in the lease agreement. But a lot of the time, what a triple net lease is considered is if there's a new roof that needs to go on the building, that cost is going to be spread across the tenants, right?
That's excellent.
It's fantastic.
Well, then the tenants are really going to want to vet a building before they sign. Well, that roof needs to be done in 2 years.
Oh, for sure, right?
You know?
Or you have to put a clause in there as a tenant saying, you know, if the roof needs to be done, I'm not responsible for this because I know it needs to be done in a few years.
Yeah.
Right. So you have
triple nets can be great because not only are you not paying utilities, everyone pays their own utilities, but then you also have no line items on your expenses because the tenants pay all
your
of them.
expenses are boiled down to the cost to manage the management, right? And usually even that's built in. So most leases you'll see a 10%, 20%, 15% management charge.
To cover property management?
Oh, wow. So there's actually like a facilitation fee to make sure everything's running smoothly.
Well, and then your other expenses are going to be potential improvements to units to sign leases and then paying realtors to lease out your units.
And mortgage.
And your mortgage, obviously, so mortgage interest, but you don't really necessarily even need an electrical account, a water account, because your tenants would do all that.
Correct.
So these
the
most simple.
These run extremely lean if it's set up properly and run as a true triple net property. Now, doing that also includes a lot of heavy lifting on the landlord's part. You got to make sure that you do a reconciliation every year, because as a tenant, I'm going to make sure, hey, my landlord's on the mark here, right? And my TMI is dependent on where the building's operating, right?
So depending on how much the building spends, you just recoup it.
You need to, as a landlord, I need to prove to my tenant now, hey, I'm not skimming off the top here. TMI is dollar for dollar. What's coming in is going out.
Yeah.
Other than that 15%.
So they pay it as they go in that scenario, or they pay it at the end of the year?
So basically how it works is you estimate a TMI for the year.
A monthly payment.
So let's say it's $5 a square foot. That's for the year. You pay your fee all year long. At the end of the year, we reconcile. And
pay back what's extra.
I can either pay back the tenant what's extra, or the tenant's got to pay me on top.
So they still got to track everything. I was thinking, hey, this is sweet. They just take care of it. But
no, so and that's the thing. So actually, it's funny. Like a lot of landlords that aren't commercial industrial landlords don't like triple net, all right? Because they see it as just a lot of work. Like if you're not set up to run the building that way and have the software to run the building that way, it's a lot of work. So a lot of landlords that are just doing it, maybe it's a mixed use property attached to residential.
Yeah.
Maybe it's just a one-off little thing that they own.
It just needs good bookkeeping though. You could use QuickBooks Online, and really good, accurate bookkeeping should be no problem.
So some landlords will just say, you know what, I'm going to go for a gross rent. So that's the opposite of triple net is gross, meaning landlord takes care of everything, tenant pays one fee, that's it. Yeah. But that fee is going to be significantly higher, right?
Yeah, I'd rather that just for the simplicity of it. But I mean, triple net sounds great, but then if you're going to manage all that, and bill it back, and potentially have to chase tenants to give you that payment or whatever.
No, that's what I'm saying, right? Like it's not all sunshine and rainbows. But
keep in mind, like triple net is like oldest time as far as real estate goes. It's been around for well longer than any of us have been.
But if your property's set up for this type of asset and you run it as a true triple net, like that is the better way to go, right?
Yeah.
Because you have the ability to, again, charge back for the roof.
Well,
charge
and you're
back
not
for the
risking it,
HVAC.
right? You're putting the risk onto the tenants.
the
Whereas if you do gross, then you know something comes up. Granted, like what's going to come out that you don't know about in a building like this, which is one of the questions I wanted to ask you about, is what is your due diligence on a building like this? You're looking at roof, you're looking at
We'll
heating
dive into
systems.
that. Yeah.
Yeah.
And so anyways, so that's, I just wanted to cover the gross and the triple net. And then there's obviously everything in between. There's semi-gross, there's double net, there's, so
Double net would just be net of two of the three things.
yeah, so like double net or semi-gross, kind of the same thing. And so what that would be, okay, we're going to cover utilities because there's only 1 meter.
Yeah.
But the tenant's still responsible to pay a proportionate share of maintenance and taxes, right?
Gotcha.
Or something like that.
Okay. So those are
It's really
case by case.
It's really case by
so
case.
there's no clear definition of what double.
So, for example, the
double
building
net.
we're in, where we're shooting this podcast right now, the lease here is a semi-gross lease or a double net lease, meaning we pay TMI here, but utility, because there's only 1 meter, utilities are all inclusive. So my TMI actually covers my utilities,
Okay.
right? So, depending on how you want to look at that.
How do you mean it covers your utilities?
So our utilities are in our TMI here.
Oh, okay.
Because there's 1 meter. So the landlord's paying utilities.
Paying it, but then they're just trying to recoup.
And then they
utilities
recoup
costs.
a proportionate share of our utilities. So we're not paying all of our utilities,
Gotcha.
right? So yeah, a whole bunch of different ways to cut it. Put it in the lease agreement. Always get a lease
That's the thing.
agreement.
It's contract law, so it's whatever you can agree on. Whereas in Ontario, there's a standard lease, so you have to do the standard lease. You can do an addendum, but any contract term that contradicts tenant rights is invalid, according to your contract, because you say it's right in the lease.
That's residential, you mean?
Yeah, in residential. Whereas you go commercial, now you don't have any of that. Like so, that, I'm just drawing the contrast out there.
So it's pretty sexy, right? Anybody listening right now going, man, I got to get into this, right?
Yeah.
And so we can talk about financing terms and things, and we'll get to that. So just to move things along, let's talk about due diligence.
Yeah,
right?
quickly through due diligence because we spent a lot of time so far. So
No, and because this is kind of the first commercial industrial pub we've talked about, and so I wanted to make this very, very bare bones, very basic. We're going to start diving into more of this and become more into the nitty gritty. But so generally, due diligence on a property like this, it's not going to vary too much compared to residential, because it's all really the same thing. Commercial's commercial. So you're going to be looking at you're going to be looking at the structure itself. So that's a building condition analysis done by an engineer.
Yeah.
Look at the roof, look at the boiler, look at the heating, the mechanicals, whatever it may be. Even if your tenants are paying these items, you still have to be careful of it, because if a tenant comes up for renewal and you're the landlord that's been jacking the rent and jacking the TMI, guess what? That tenant's going to go somewhere else.
yeah,
Right? They're not going to want to stay there.
You
and
don't
deal
want
with you.
big stuff coming because it hurts the tenants. It's going to make them less likely to want to sign with you.
This is a relationship it's an ecosystem you got to build, right? Like you want your tenants to be happy, you got to be happy, everything's got to work. So that's one thing. So check all your mechanicals in your building condition. You're going to do an environmental. An environmental is extremely important when it comes to this type of industrial, right? With residential, it's kind of like it's a check a box because most of the time buildings are fine.
Yeah.
Right. With this type of stuff, your environmental is going to become a bigger
Because some of your
issue.
tenants might have used certain chemicals in their shops, and it might be in the concrete. And
Yeah, it could be anything, right? Oil changes, it could be printing press, could be whatever it might be. Like,
and those could have an impact. So
and those have an impact.
So you want to get a clean environmental. Is this one of those things where an environmental from 5 years ago needs to be updated?
Correct.
So you can't
Always.
just assume, like, because in 5 years things could have happened.
Correct. Like this is actively could be being contaminated. That's terrible English, but
as of the time, the time you're buying it, it could be in the process of being contaminated.
correct, right? So this is something you got to be careful with. Also selecting tenants, make sure they're not, if you're okay with a dirty use, that's fine because you could get more money for it. Like an auto mechanic is going to pay you more money than an ice cream shop. Right?
Yeah.
So that's something to keep in
But
mind.
then you have to potentially remediate it.
Have to potentially remediate.
Can it be remediated like you can scrub the concrete off with soap?
Depends, right?
Yeah.
And so with this type of stuff, like I don't want to scare people off from environmentals because more likely than not on an industrial property, you're going to have to go to a phase 2.
Yeah.
So that's something to keep in mind because
That means they're going to do testing.
Because we
and
rarely,
sampling,
like
right?
with residential properties, most of the time, unless you're getting a crazy
phase
deal,
1.
a phase 2 happens and you go, no, I'm out.
Yeah.
Like it's not even worth your time to dive into a phase 2. Right. And so what a phase 2 environmental is, they're actually going to be digging boreholes, drilling boreholes and testing groundwater, soil, what's down there.
Yeah.
All of that.
That starts to cost a lot of money. Once
And
you
it
get
does.
into
That can be
boreholes.
20, 30, 40, 50 grand and months of time, right? So these are things that are more likely to come up in commercial real estate, industrial real estate. But that can also be negotiated with the landlord. Hey, who's paying for that stuff? Do you have one, right? A lot of the time it's in the best interest of the seller to go get an environmental before listing.
Okay.
Take care of those issues. So that's the second thing. We'll dive into that more as we go. And then obviously appraisal, right? Appraisal's a big one. So those are your big 3 reports you're going to need, just like residential.
Yeah, that's all the same.
But with commercial real estate, it's very important that you thoroughly inspect the lease agreements. That's the lifeblood.
Yeah, you're gonna want to obviously take your look, but then also pass it to your lawyer.
Have your lawyer review your lease agreements. What are your rights as the landlord? What are the tenant's rights, right? What if? So that's one of the biggest things is before I dive into anything, the first thing I do is quickly review all the leases, right? How long are the terms? We need to make sure it's a bit of a give and take because we need to make sure that the tenants are going to be in the property for a decent amount of time or else the bank's not going to be attracted to lend.
Yeah, and a bank on something like this, we're going to be more like 65% loan to value.
65, 70%, 75% at the most, right?
Yeah.
But 65, good rule of thumb, right? If you're just kind of looking around thinking, what am I going to spend? 65%. We don't have CMHC on this.
No, can't get
Right.
CMHC.
So
Which means that your cap rate's going to be a little higher on something like
they
this.
tend to be higher. Yeah,
Yeah.
cap rates tend to be higher. Vacancy rate is run significantly higher, 5 to 10% vacancy rate,
Yeah.
right? You want to review those leases. You want to make sure those tenants are in there. So a lot of the time, a red flag or something just to look out for is landlords will run a property to the end of its lease terms, right? A lot of the time you see retail plazas for sale and you're going through and you're going, man, all of these leases expire within 1 to 2 years, right? Or 1 year.
And that's why they're
or
getting
are
out.
month to month, right? And I'm not saying run away because that might be an opportunity to negotiate a better deal and go speak with the tenants. But if that landlord was planning on selling the building and those tenants were open and happy to renew, why not just go renew?
Yeah.
Like as a real estate agent, I would go and negotiate those leases for my landlord and say, hey man, we're going to sell this. We got to get everybody up on a new 5-year lease.
Yeah.
Right. So that's something to look at. So this property in particular, we're kind of running out of time, so I won't dive into the nitty gritty. Maybe we do a part 2.
Yeah, we can always do another one or a second episode for this.
Yeah, so this one, challenges are going to be financing because of the vacancies. Something you can speak with the owner about is possibly, hey, can I go find new tenants before we close? Can we put some tenants in? VTBs, is that an option?
Yeah.
Right? Support me with a short-term VTB. Let me go find 3 new tenants in the next 6 months, and then I'll refi.
Right.
Right. So these are little things you can work on. Get it for the right cap rate. Make sure it's going to cash flow. And and
everything's negotiable in
Yeah.
a scenario like this, right? Like
yeah.
you're not going to have like a crazy bidding war on a building like this. It's very much let's make a deal that makes sense. And
that's because you weed out a lot of the high leverage buyers.
Yeah.
Right. If your game is high leverage, low capital in high leverage, multifamily is the way to go. And that's why a lot of investors start in the multifamily world.
Yeah, and work their way into this
and work their way into commercial, retail plazas, this type of stuff, because you do need more capital to buy this type of property.
For sure.
But just because this is $3 million doesn't mean if we go to a smaller town and find a single tenant use, you can get into these things you can be in for $1 million, under $1 million, right? Like it's just, so if you're interested in this type of asset class.
Yeah, so you're saying $1 million for all in leveraged, so your investment is going to be lower. It's going to be like a few $100,000. Yeah. Right.
So they're not all 14 million, 18 million. Like we can find affordable commercial properties.
Sure.
And I find it very cool. I like it. I'm attracted to it. It's something that I've put a big emphasis in this year because of how the market is. I'm finding good opportunity in this type of asset class. And for anybody that's exhausted with Ontario landlord and tenant legislation, this is an option for you. Let's go down this road. So, anyways, we'll wrap it up there.
No, that was good.
Yeah.
Jake, you're obviously a wealth of knowledge with this stuff, and that was a deep dive. I mean, it'd be great to go into the numbers too, but
let's just do a super nerdy numbers episode.
We'll do another nerdy numbers episode on this. It won't necessarily need to be as long because we'll just say building off of this. So the next time Jake and I are doing one together, hopefully that'll be what we'll do. And then, just kind of dissect that a little bit more, because I do think that this is an important asset class that shouldn't be overlooked.
Yeah. And I feel
in industrial, like really, really wealthy people, like I've talked to, like buy industrial, like, oh yeah, industrial's where it's at.
Yeah.
So
and again, the barrier entry is difficult, but I don't see why more newer investors are not attracted to this type of asset class. And again, it's all leverage based. But
perfect.
Listen, if you guys want to hear more about this type of asset class, put it in the comments. I want to see some comments saying, Jake, let's talk more about industrial commercial. Because if not, if you guys are saying, no, show me more multifam, then we'll just go back to multifam. But I like this asset class. I'm going to leave the multifam to Dave Holshoft. I want to start talking more about this type of commercial.
Cool.
Yeah.
Yeah, we can do that. I like mixing it up. And yeah, guys, so please do that. Leave us a comment. Let us know what you think. And then if you are interested in getting on the insiders list so you can actually get access to these off-market deals that Jake and team have available, you can join that using the link below the video if you're on YouTube, or if you're on one of the podcast platforms, you can actually join just through the show notes link. It's in the show notes. So
it's down below, guys. You go to the database. If you want to book a call with us, you're welcome to do so. Reach out. But we want to build that database. We want you guys in there. We do an email once a week called Deal of the Week. That's kind of our newsletter more so. So we are going to show you a hot deal that we found, whether on MLS, our deal, somebody else's deal, whatever it is, wholesale, whatever. It's going to be a cool hot deal. We're going to have the latest episode of the Hot Seat, just in case you missed it. And then we're going to talk about other events happening. Something that I am personally going to take responsibility for, and I'm coming out and saying it as a goal. I want to fire up the REI Hot Seat meetup again. We took some time off from that just because the feedback was, hey, there's a lot of meetups happening, but I want to fire it back up. We're going to try doing quarterly.
Got the room to do it here now.
Once a quarter, we can do it here even. We'll have a party.
Big room in the new office space here that kind of allows for that. Part of the challenge before was just even the venues and like coordinating it with them and not knowing our numbers. Whereas if we have our own space, it just allows so much more flexibility. So something else, again, in the comments, and I'll put a little ad out, or I'll put like a survey out on Facebook or something like that. Do you want to host it quarterly, monthly? How do you guys want to see it? And then I'd also like to know, would you prefer a free event where you're charged for drinks and food, or would you like a door fee and we'll supply drinks and food? Because if we do it here, we got to do some sort of door fee. We got to just cover the cost of the food and drinks. So put it in the group chats. I'll put a little thing up on YouTube. We'll do, because you can do a little survey. Okay.
I'd love to do that. And
awesome.
Making a lot of work for Andrew here. But.
Yeah, he's writing checks right now. All right, guys. We appreciate you sticking with us this long. This is a longer episode, but I think we dove into a lot of good stuff. Hope you enjoyed it, and we'll see you again next week.